Right, good day grade 12s. In this lesson today I'm going to start with a third of your topics that are relevant for the second term of your grade 12 year, and that is manufacturing or cost accounting. Now this topic was already introduced to you in grade 11 and you've already done a fair amount of it. We're just going to take it on a slightly different angle. But before we go, let's just go back on a big revision of what we did when we started in grade 11. Under a manufacturing business, a business is going to make the articles. Whereas up to now in our retailers, they were buying articles, they knew what the cost price is, they added on their profit, and therefore they could work out their selling price. In a manufacturing business, it works out slightly different because now they have to make the goods, and so they've got to determine the prices. Now basically our costs are worked in three categories for the manufacturing side of the business. First of all, there's your raw materials. And if we're looking, let's say for example that we're going to be making clothes over here, well, we're going to have rolls of material, we're going to have cottons, we're going to have buttons, we're going to have labels and so on. Those would all be your raw materials, material that would go into making those items of clothing. Secondly, that material has to be cut and then sewed. So you've got labor that will be involved in actually the sewing of the material throughout the day. And then thirdly, we've got what we call our factory overheads. These would be your rent, your electricity, your cleaners, your consumable stores, your depreciation, and so on. Now in grade 11 you kept separate ledger accounts for these three cost components, and then these cost components were all combined into a work in process stock account, which was your manufacturing account. It was done in a ledger form in grade 11. Now you will not be asked the ledger, so I'm not going to look at that ledger anymore. But basically once it's finished in the manufacturing process, those goods then pass on into finished goods. They will now go to the storeroom, they will go into the shops where they will be sold, and those things will be sold at a profit. So we're going to have a flow of goods. We're going to have raw materials in a stockroom. They will then pass into the factory where the labor will take it, combine it with the electricity and other salaries, other depreciation, bring it all in together to work out the cost. Once it's finished with manufacturing it, it'll pass on into the finished goods and then it gets sold. Now that flow that we worked in last year is exactly the same as we're going to do in this year. Now in grade 12, instead of doing ledger accounts, we're going to do a statement. This is exactly the same as when you started in grade 9. In grade 10 you would have done a trading account and a profit and loss account, and then you went on to work out an income statement. The same concept applies here, and we call it our production cost statement, and it's for a period of time. Now basically, just like in the ledger accounts, the three cost components will be brought in. There's your three cost components, your material cost, your labor cost, and then your factory overheads. But being a statement, it will be vertical, there'll be no debits and credits. And we do show a little bit more information from the point of view that my material and labor are what together we call them our direct or our prime costs. Those are directly involved in the manufacturing of the goods. Whereas your factory overheads are essential. You need a factory in which to work and you need electricity, but they're not directly involved in it. So we'll bring in the factory overhead costs, and then that equals our total manufacturing costs. Now, just like we had when we did in grade 11, it is possible and very likely in a lot of factories that they won't have finished all the items that they're producing in one day. And so they could have work in process. Now work in process is partially completed goods. So when they start at the beginning of the financial year, there might already be some t-shirts that are partly made in the factory, which are going to first be produced before any new ones produced. But the important thing is those will go into the finished goods for this year. They weren't finished last year, so they weren't part of the finished goods of last year. They'll come into this year. And likewise, it is possible that we might have some goods that are still on the production line at the end of the year. We partially completed. They are not going to be sold yet. They're not ready to go to the storerooms. And so we will have to minus these ones away because they will not be finished goods. And then this whole thing equals our cost of finished goods. And that is the important thing of what we're trying to work out in a production cost statement. Taking our costs, we want to know what the cost of finished goods are for this year. So we will add on any partially completed from last year because they'll be finished this year. But any that are not completed by the end of the year will be taken out, those relevant costs, and they will go into next year. It's like an expense prepaid. You've prepaid some of the amounts. Now the important link here is that this cost of production of finished goods, once it's finished in the factory, it will then move into the finished goods note. Now in last year when you were doing ledger account, you had a finished goods ledger account. Now we will have a note for it. So we've got, these are our finished goods. Please, very important, these are now fully made t-shirts. So you might have some t-shirts already, just like you'd have a trading stock at the beginning. Remember, in a retailer, we would talk about a trading stock. In a manufacturing, we just refer to it as finished because we are making it. So you could have some opening stock. And then this is what comes out of here. So your production cost statement, once the goods are finished, this figure here gets carried into here. And that is where they move out of the factory into the finished goods. Again, it's possible that you might have some stock left over, and so you haven't sold them, and therefore we will equal our cost of sales. We're going to have our cost of sales. So our cost of sales is the amount, the cost price of the goods we sold, as we've always done. What goods did we have at the beginning? What has come in from the factory minus what we haven't sold equals our cost of sales. And that's the basic flow. There are notes attached to all the items, and I will go through those in a separate lesson.